Welcome back, investors. Today we're going to be going over my portfolio update as of July 15th. First, we'll start by going through Charles Schwab, taking a look at the positions that I have and the ones I've currently opened. Then we'll look at the purchases that I've made, the dividend yields that we're looking at, and then we'll move into the Fidelity and Raisin account where we'll see the interest I'm earning and the overall idea of the Fidelity Small Account Challenge. If you find this interesting and you would like to let me know that you find it helpful, please subscribe or leave a like or comment. I'm happy to get back to you, but let's jump straight to the Charles Schwab account. So as you can see, we have $83,883.16. We're up $800 on the day, but $400 of that is from my biweekly contribution. If we scroll down here, we'll see some of the positions that I'm currently holding, and over here you'll see the actual weight of the positions. So AbbVie is a dividend stock that I want to start buying, and I wanted it to be on my watch list, so I just bought $10 worth. Then AMD, I hold it in two of my accounts as indicated by the two. I hold 6 shares. It's trading at about $180 and currently up about $360. I bought this a while ago and it's only 3% of my account. Airbnb, 4 shares, about $150 a share. And overall, I'm down on it because I bought it when it was a hype thing way back when, and I've just kind of haven't added to it because there's no reason to. MO, Altria Group, I think in the long run, they're turning things around, and as a dividend stock, they are very solid. They have a very high dividend yield sitting around 8%. So I've only purchased 13 shares, so I've accumulated since 2021 1.46 shares, which is kind of impressive, just not doing anything, and that makes up to 0.1 roughly percent of my portfolio. And we'll skip a few, and we're going to look at Pfizer. Pfizer is a company that pays about a 5.5% dividend yield, and I'd like to be purchasing more dividend stocks over time to try to keep my 70-30 weight still intact, but having more income generating assets. As you'll see, I am about perfectly split 70-30 between assets as ETFs and just individual stocks. The next one, I bought 7 shares this week of Realty Income Corp. They are a REIT trading at about $56. They have about a 5.5% dividend rate. They pay out monthly, and I think that'll be really encouraging to still see pop up in my account every single week and just getting that. It's like 26 cents a share. So it'll only be a couple dollars, but over time, as that gets reinvested, it will continue to grow, and as I add to it, it'll definitely continue to help. Then I hold Coca-Cola. It's only about a quarter or 0.5% of my portfolio. It's a product that I use and enjoy, so thought that it'd be good to own the shares. UWMC, like I said in my last video, it is one of my favorite stocks. I own almost 800 shares, and getting to 800 shares is a goal of mine to get $80 a quarter in dividends because they do pay 10 cents per share. And that is way too large of a position relative to my overall portfolio. It's about 18, almost 19% compared to the other like 3% that some of the other holdings are. And then Walmart is just another solid stock. They pay a dividend. I enjoy seeing the income hit the account, but we need to add to that position. And you can see that right here, we're just under 30% of the overall portfolio. And if we come down to the ETFs, you'll see that I recently purchased SCHD. I bought 5 shares and makes up about almost 1.25% of the holdings. And then VDE, Vanguard's Energy ETF, I have a little over 22 shares, up about $300 on it, and it makes up almost 9% of my overall holdings. And then VOO, I hold it in all 3 of my accounts, and VOO, it just tracks the S&P 500. It has a 1.4% dividend payout. I have 35 shares at about $520 per share, and that makes up 55.36% of my overall portfolio, which makes sense as I'm almost 25, so as I continue to get older, I want to be as aggressive as possible in growth, and I think that is the way to do it, as well as balancing the other 30% of my portfolio to growth stocks that I personally believe in and think are going to be around for the long run. Next and last, we have VTI. I have 6.1587 shares, up almost $500, and it makes up 5.2% of the portfolio. I believe the rest is just going to be cash down here. Yeah, I'm not holding a whole lot of cash. I'm happy to be in the market. I'm young enough and I don't plan on using any of this money. So I'm totally fine sitting through 20% ups, 20% downs, whatever the market throws at me. I'm happy to take a discounted price. So if we jump over here, we'll see that the purchases that I did make this week, there's 5 of them. I bought 2 more shares of UWMC. They have about a 5% dividend yield, and that's that 10 cents per share. I want to get into more income producing assets, so these next 3 have a higher dividend yield. Next 4 actually. SCHD, everybody loves it. I bought 5 shares totaling $393.15, and they have a dividend yield of 3.64%. Then I bought O, which is Realty Group, and I bought 7 shares at $390.23 total, with a dividend yield of 5.6 roughly. And then AbbVie, I'd like to add more shares to it. I bought $10 worth just to have it on my radar for the next time that I go in to make some purchases. And then in my personable taxable account, I made purchase of Pfizer. I bought 1 share. It was $29.08, but it does have a dividend yield of 5.77%. So as I'm working towards getting more income producing assets in that account, my short-term goal is to get my forward 12-month expected income to over $1,000. It is currently at $760, which I'll show you here in a second. But I did the math, and I need to add about $4,800 into dividend stocks with an average of a 5% yield. So on Charles Schwab, there is an income estimator tool if we go investment income. So this will show what I have made and am expected to make through the rest of 2024. So my monthly average is about $55. My total received thus far in mid-July for the year is about $450. And I'm expected to still receive about $200 in dividends by the end of the year. But the next 12 months is what I'm working on. I have it at $760. And like I said, I need to invest just under $5,000 into dividend stocks producing about 5% yield a year to get this up to $1,000. And then we can get that dividend snowball rolling, and we'll hopefully get that up to $1,100, $1,200, $1,300 to where we're averaging $100 a month on average, and we can just really get that working for us. So let's jump into the Fidelity account. So still have the same number of shares in VOO. The stock market has been up since the last portfolio update, so we are up a little bit there. And then I did add SCHD into this portfolio as well. I do make $75 bi-weekly contributions to this account, so I bought just about 1 share of SCHD, and that brings this account up to just under $700. And doing some breakdowns on this, the 75 every 2 weeks is $150 a month, which is $1,800 a year. And if we go over to calculator.net, this is what I love to use for all of my kind of predictions of where I think things can be. And this is where I can be as conservative or liberal as possible when trying to figure out where my income streams will be for in the future. And so right here you can see in 25 years, if we assume an 8% return, which is on the low end for the S&P 500, compounding annually with an additional contribution of that 1,800. So this will get us the low end of the spectrum, because it's saying that I'm adding the $1,800 at the end of each year versus it's a very small difference because it's not a ton of money, but you can see it goes from 131 to about $11,000 more, versus we can even add it to the 150 a month for those same time frames, and then that changes as well because it's not that lump sum being put in at the beginning of the year, it's spread out throughout the year. But So this is what I use to see where that account will be at. And if in 25 years, I do have a kid who's going to college, I will have about $140,000 that is easily accessible and set aside specifically for their education. And then the last thing to go over is um, the cash account. So settled cash, we do still have the same 14,000, but there is a transfer en route of $1,000, putting it up to 15,288. And I'm expected to make about $59.16 in this account, and that's calculated by this number getting multiplied by the 4.8% interest I'm getting, and then I prorated it this $1,000 for the latter half of the month as it's only going to be invested or accruing that interest for half of the month, so it only gets half of the yield. And then, so we'll go back to that snapshot. Everything is still very similar. The Fidelity account is only about 1.5%. Charles Schwab makes up about 2/3, and Raisin makes up that other third, less that 1.5%. So that is all for us today. If there's any concepts you'd like me to go over or any questions you have about my holdings or any of the update, I'm happy to answer them. Please leave a comment down below, and I will see you next time. Take care.